Dryden Pence, Chief Investment Officer, Pence Capital Management, and Jay Young, founder and CEO, King Operating Corporation. Thank you both for being with us. Dryden Pence, what did you think of the Exxon Mobil announcement on the second quarter? What was your takeaway?
Well, the takeaway for me is that trying to compare Exxon Mobil's second quarter this year to last year is probably not a good comparison, because you had an anomalous event last year, $120 oil, you had a war in the Ukraine. So when we compare it, we go back to 2021, and then we're looking at, this is actually, fairly positive. So we're constructive on Exxon going forward. We're just kind of basically taking this report and the earnings and saying, all right, fine, you had an anomalous event last year. Oil was peaked, gas was peaked. It was due to a war. But now when we get into a normal relationship, we think that they're doing very well, and we're constructive on them, particularly going into the back half of the year where we continue to see chances of constrained supply. I mean, people forget ExxonMobil, $3.7 billion in production, they produce as much oil as Iran. They'd be the 7th largest producer in OPEC.
So are you a buyer, Dryden, of this company?
This company is in our models, yes, and so new money gets it. Absolutely.
I understand. The CEO, Darren Woods, has talked about the record oil demand that they expect to see over the next year or so, Jay, and I was wondering your thoughts. Do you like Exxon at these levels and what you heard from the report?
Absolutely. I mean, one of the biggest things that I like about what they're doing is they're enhancing their recoveries. The completion, when you drill a well, complete a well, you don't get all that oil out of the ground. It stays there. 10-20% of it never leaves the ground. It stays in the ground. So what Darren's talking about is going back in to recover more oil. His goal in the 2018-2019 was to go back in and enhance their recovery methods. So to get more of that oil out of the ground, they're not going to get 100% out of the ground, but they can get 20, 30, even up as high as 40%. So that was one of the good things I liked. The other thing was, they're talking about the headquarters going down and moving to Houston where everybody can collaborate, get together. I mean, you hear about AI. Hey, that's still not anything to talk about with people and decisions, emotions. That plays large. That plays really big with Exxon moving forward. So yes, I really do like the stock moving forward.
Jay, do you like Chevron? You said you like Exxon. Are you a Chevron fan? What about some of the others that always seem to come up on my radar that people like? They like Phillips 66. What are some of the names that you like on the group?
I do like Conoco, but I'm going to tell you what, though. I mean, there's these smaller companies that do what I do, right? I mean, they're smaller companies and they don't have the access to capital. They're not huge. Ring Energy's always been on I like Ring Energy. They're out of Woodlands. They've been in Midland forever. San Andreas prospects up there. I mean, they have.
What's the ticker on
and
that?
if you look at the they're trading for like 2 times EBITDA right now. I mean, they're making $200-300 million a year, and their stock's selling for $500 to $600 million. I mean, it's smaller companies like that. That's what Warren Buffett's talking about right now. He's talking about those earnings right now. And the earnings are what's driving these stocks, and that's what I'm a big holder in Ring Energy. I'll have to say that. So, but I'm not trying to solicit for them. But I do love the stock. I love the people. I love the asset, which is when you get your oil and gas prices and they continue to increase your production while you're looking at decreasing your drilling completions.
Yeah.
That's what makes a really great company.
Jay, what's the ticker symbol on it? If you don't have it, look it up and tell me. After, do you have this symbol on that?
No. Ring Energy, is it?
I want to talk to Dryden in the meantime. Dryden, tell me about where you think oil is headed, because Goldman Sachs came out. They talked about the demand. We have the CEO now of ExxonMobil saying the same thing, Dryden. Oil passed $80 a barrel. So you're a fan of ExxonMobil, Dryden. What about Chevron and some of the other names?
We're constructive on the whole sector, and definitely Chevron as well. They're large and dominant and integrated. I think when you talk about oil pricing, we see that there is a demand. Demand's going to outstrip supply in the latter half of the year, so we see oil prices firming up. We think, we're going to be in that range now. We've been in the 60 to 80. Now we're going to probably move in the 80 plus range a little bit. I don't see it getting out of hand or going back to 100, but I think that we do see this thing tightening up a bit, and we're going to be very constructive. So you're going to see the range at which the oil price volatility is going to probably begin to move from 75 to 85, maybe to 90. So as you get in the back half of the year, you have this instance where companies are far more efficient than they have been. And in doing that, they're going into a market where they have higher prices, higher margins. That's going to be good for earnings. That's also probably going to be good for the. I mean, you think about Exxon's PE right now is like 8.2 or to 11, on a forward, and you're looking to an S&P that's at 17. So there's room here based on all the metrics. And what we see going forward for these companies to benefit from a higher oil price, and it'll increase margins. And there you go.
Yeah, look, and profitability. And we've seen some of these companies do incredibly well with record earnings over the years. Jay, what about, moving into the world of, alternative energy? A lot of these companies are already doing it. Even Exxon and Chevron are already working on that.
Yeah, they are, and we are as well. Everybody talks about it. It's on everybody's. We just got some permits in Wyoming, which is incredible. But obviously, you had to talk about what you're going to do going forward. But it is something that's coming. I mean, we know electric cars are coming. I mean, it's like there's no question out there. But what you don't see, you're still going to see an increase in demand for oil because we're not using 100% of oil. It's cars. There's all these other. If you look around, there's all these different products that take all these different, materials like plastics and lipstick and all the other things. So we're not going to be done with oil anytime soon. And when you have companies such as Ring Energy, I mentioned earlier, which is REI is the symbol. I'm looking at my TD Ameritrade app, and you have Matador. I got Permian Resources. I've got Riley Exploration. Some of these, look at that. Look at the EBITDA. I mean, it's like so small, and you could buy this company and pay for it in 2-3 years. It seems like with some of these, we will see alternative energy, but it's not going to go It's not going to go away anytime soon. We're excited about the future moving forward.
All right. Thank you both very much. And thanks for that ticker, REI. I'll check it out, too. Nice to see you both. Thank you very much. Dryden Pence, Pence Capital Management. Jay Young, King Operating Corporation.